Welcome to week 3, session 2, and I'm going to be your host for today. Still my humble self, Prime. Today is actually going to be about, we're going to be teaching or rather sharing or rather learning about, hope you guys can hear me clearly though. We're going to be discussing about, we're supposed to be discussing about indicators, but I mean, if I'm supposed to teach you about indicators, I have to be using it. I have to know stuff about it, right? That's the truth. I don't, right? So at some point in my life, I actually did use indicators, but then I found out that most of them were just bullshit. I mean, they don't make me money. They didn't make me money. They failed to make me money. So I didn't keep up with it. Maybe some other people did use it and do use it, but nah, I don't make use of it anymore. Well, our lead technical analyst, Meko Smith, will be joining us in this call later. And I'm very sure he's going to share one or two things about indicators and how they're used. Yeah, so we're still going to continue from where we stopped as of Monday, right? We'll be talking more about market structure, how they are used, chart patterns, time frames, top-down analysis, smart money concepts, liquidity, inducement, fair value gap, breaker blocks, imbalances, trend lines, and a lot of stuff. Area of interest also. So, okay. Hold on while I share my screen. Sorry, a little bit of issue here, but trying to resolve. Now, so I was doing something earlier on BTC. I'm sure we all can see my screen right about now. So, can someone just quickly tell me what you love to know more about when it comes to market structure, area of interest, other blocks, other flows, breaker blocks, break of structure, market structure shifts? inducement, liquidity, these things you've been hearing, like, I mean, some of you might already know it, some of you might also like have questions. So I'll just love us to take questions because I mean, none of us here are beginners and this is very technical now. So I feel that we only learn when we're eager to learn. And I like giving the people who are actually eager to learn the chances. So ask your questions, tell me where you feel you've been lost and you want clarifications. Let's just start hammering from there. Okay. So you know how we roll in this class now. No cross answers. You raise your hands and we'll take the questions one by one. Okay. Emmanuel, Moa.
Good evening, sir.
Good evening, Emma.
Sir, my question is, how do we, last week you taught us break of structure. So my question now is, what's the difference between change of character and break of structure?
You go how you. Sorry, okay. The difference between change of character and break of structure. Well, mhm, I would say there is really no difference to me. I would say that there's really no difference. But majorly, the main difference would be that the change of character is usually seen on the lower time frame. And by lower time frame, you know what I explained that lower time frame is, and you know the time frames. I'm sure each and every one of us here know. See, anything I'm saying, I'm sure you know. If you don't know, ask your pals, ask your colleagues. I mean, we're all here to learn and share. So yeah, you guys already know what lower time frames are. So those time frames you would see more of change of characters, which guides you for your entry. While on the higher time frame, you'll be seeing more of uh break of structure, a clear break of structure, which will guide you to understand the direction now in which you should be trading or in which you should be looking at to take your bias for your positions.
Sir, please, if you don't mind, can you just demonstrate it today, please?
Ah, wait now. I'll demonstrate it, but we are taking questions. I will. We have a lot of time ahead of us. That's what I'm here for. Any other question or any other comment of what you want us to be doing. Anyway, before I go ahead, technical lead analyst Kida is on this call. So I want him to say one or two things to each and every one of us and also probably, impact us. So please, the floor is all yours, Mr. Miko Smith Michael. Sir. Thank you, sir.
Hello, fam. Who missed me? It's been a minute. I'm happy to be here again. We met during the opening of the old boot camp, and I gave you guys words of encouragement, and I also told you guys how the old forest class will be. And I'm happy that you guys are happy. So it's good again to like join you guys in the section and like get to learn with you guys and also get to see your experiences so far and what has been working well for you, including your challenges so far. We are open to like amending some of those challenges just to better your understanding in the game. It has not been an easy journey, and I know that all the tutorials, it's not really like comprehending immediately, but believe me, with continuous assessments, learning on your own, YouTube and other learning materials will also like get you far. um I'm so overwhelmed with the whole reactions. I don't even know how to put it. So thank you very much, Mr. Prime. I really appreciate. Prime is a brother and a colleague. We've been in the space for a while and we've get to interact very well. Um, what I know is that it might not be easy now, but just know that in time it will really get better. Once it gets better, you'll be so obsessed with the market because market is now like giving you everything that you deserve. After tonight's class, please do well to remind me in the group. Don't come to my DM because if you come to my DM, I will charge you. So remind me in the group. You can actually type it in the group. What about or the PDF? We're waiting for the PDF. So I will send you guys a PDF that will direct your path to the journey of trading. I'll send you volume one and no, I'll send you volume one now. Then I'll now send volume two next week. Then I'll send the final volume once you pass the entire exam. That will show how serious you are in like the trading system. So believe me that after studying this PDF, you'll be a master of trading. Yeah, you will be speaking language of trading. I'll tell you using the double bottom, can you identify a fair value gap? Then using the entry and like a 50 moving average to spot out the take profits. This is a trading language, and I know that most of you might not really understand what I just said now, but I believe that please don't lose focus. I know that the journey might be rough, but don't lose focus. Remember, I told you guys that the top three, Abby, yeah, I think it's top three, that made it very well. Like we make it up to my private mentorship. What does that mean? I'll mentor you till you become idolo. Thank you very much, Mr. Prime, and I love the awesome lessons, and I hope we can.
Oh, okay. That was awesome. So it seems like our lead analyst has just spoken. Yeah, he's done speaking and he's muted already. So we'll take it up from there immediately. So no time to waste time. So last week I was teaching you guys about structure and how to identify your higher highs and higher lows and how to spot a clear break of structure, usually from the higher time frame, because that's where you can limit the noise, which will guide you as a form of top-down analysis from the up to the down, which is from the higher time frame down to the lower time frame. So uh, that brings me to what we'll be teaching today. I'm teaching spontaneously, so stay with me. So I'm going to be talking about area of interest now, right? Because most of us seems to have this issue of identifying where the market might actually react from. I'm not saying that markets will do everything to please you, but just know that if you understand some certain things, the journey is going to be way easier for you. So let me just go here. Now, this is a BTC USDT uh, chart. This is the weekly. And I think it was BTC I used to teach last time now. I don't know why. You people should forgive me, but I think this is what keeps on popping up. Okay, let's use something else. Why don't we use something else? Let's use this. This is neither actually a currency or a crypto, but it's also an asset. This is the US 100 cash. Some people call it US Tech, some people call it NAS 100. It's also under the NASDAQ. And it is A stock market, when you hear US 100 cash, it simply means that 100 companies came together to form this. So this is actually 100 companies all in one, you understand? So that's what it means. So we can see this now, even without all this stuff, right? If we do remove drawing, remove tree drawing, and blah, blah. So if we go from the weekly, as I said, it's always good for you to uh, point out or for you to spot whatever is happening from the higher time frame. You could see that, as a matter of fact, when we talk about break of structure, right? This is the seller structure, just like we said the last time. Don't be expecting me to say new things. I will say new things, but why are you moving to new things when you don't even, when the old one has not stuck? I'm not saying that we are dummies, but I'm just saying that practice makes perfect. So if you think that I'll come here and I'll start blowing more grammar, no, 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 no. If it's A I said yesterday, I'll come back today and I'll say A. And I might come back next tomorrow and I'll still say A. And I'll come back next tomorrow if there's anything like that, and I'll still say A. Because A, if you can understand A properly, then that's one step to perfection. And that's what this game is about. It's about perfection. It's a skill, right? Why is it a skill? It's a skill because you keep trying to be perfect. You really can never get there. But if you get there, then that's fine. It's lovely. But I mean, so this was the seller structure, like we said the last class. And this here will be your buyer structure. All right. Up to here. Yeah, up to here. So you can see that this is your buyers bar. They were able to break the seller structure at some point, at this point, right? Yeah, they're able to break this buyers, this seller structure at this point. And since then, what have we been seeing? Okay, so since today is actually about indicators, right? I keep on telling you guys that I'm not going to spoon feed you all forever or even at all. I mean, I believe that learning trading or learning in all cases is very much an intentional thing and it's a personal journey, right? So if you today is actually supposed to be about indicators, I urge you all to go and read up on indicators. Okay, go to YouTube. Indicators is not, it's not a big deal. It's not a big deal at all. I mean, 95% of traders don't use indicators. So that's just to show you how useless we who are in this space have already like considered indicators to be. But just to be on the safe side, if you feel like indicator is something you want to probably use or test out, go and read on it. You can go to YouTube. The videos are there. You can ask ChatGPT. ChatGPT knows these things. They will just tell you the basic indicators and how they're used. For advice from me to you, don't worry about it. It won't do anything to you. So even rather do you more harm than good, considering that most of us are still like, we're not like pro level yet. We're still trying to figure out our shit out. So adding indicator to it all is like just adding fuel to fire. So sorry, I was just tidying something up. So we said this buyer structure, right, was able to break this seller structure at this point. And since then it's been going up. Why? Because the power has changed. As at this point, right, when these buyers were able to break this point, it means that buyers have kicked into the market fully. And we keep on seeing, if we want to recall from our how we use our parts, we keep on seeing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Obviously, we expect to see a higher low maybe somewhere around here, then boom, right? Continue the trend, because this is a trend. A trend is coming around there. If I do like this, you can see the line already. But I'm still going to map that out. I hope that was clear. So what am I trying to say? I'm trying to say, look for more of buys on this trade. I mean, I cannot overemphasize the need for you to look for more buys on this type of trade, it's already evident to you that okay, buyers are in control from the weekly. You go to the daily, you're seeing something as sweet as this. This is a trend brewing, right? It's important for you to do what? It's important for you to map out your trend line if you feel like, I mean, just map it out to show you that, oh, okay, you're trending up. At this daily time frame, we can still see a very clear break of structure around here. But people that are asking me what's the difference between break of structure and change of character, this is break of structure, daily time frame, high time frame, break of structure. Now, the forex people now, because I mean, how many times? Okay, BTC is actually a crypto, so well, but what do you guys see here? My people, what do we see at this point? Aside from a break of structure, what else do we see? I'm seeing like 1, 2, 3. So what do we see at this no answer is wrong. So let's try. Does anybody want to try? Hello.
So can you see, let's say, indecision from both the buyers and the sellers?
Indecision. Indecision. Hmm. 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 Somebody said some support. Another person said resistance. Thank you. Who said resistance? Confidence, Jeffrey. Confidence, Jeffrey. Please unmute yourself and explain why you think there's a resistance at this zone.
Yeah, good evening, class.
Good evening.
Good evening. Okay. I think it's resistance because if you look at the chart closely, price kind of bounce back when it got to that particular spot before breaking it and kind of resisted. So that's
Okay.
why.
So
That's
you're
why I
saying
think
price
price
resisted?
resisted.
Please mute your
Yeah,
speaker.
at that particular point, yes, I think four
Okay.
times.
Four
Four times.
times.
4 times. No, more than 4 times because there's about 7 candles there. 7 times. I think it was 7 times. You started with the bullish candle and the small bearish candle, the very big bearish candle. It went down and came up again until later broke that place at the eighth this thing attempt.
Wow.
Wow.
Okay.
Okay.
Thank you very much. That's a very detailed explanation. And I'm impressed that someone is actually trying to follow up here. So, okay, Nuruddin, please, by all means, let's hear you.
Okay, hello, good evening. So, basically, from what I'm saying, it looked like a ranging market before the market move to the support market, before it break the next higher high.
The next higher high.
Yes.
Okay, now this is actually a resistance zone, like I think Godfrey or Jeffrey mentioned, right? But on this daily, I will not say that market resisted it 7 times. Markets price came here. It got resisted at this zone. It fell. It tried to come back there again. It got resisted at this zone. It fell significantly, but then gathered momentum at this point and broke above that resistance zone. And now that resistance zone now turned into a what? What did the
Support level.
resistance? The resistance zone turned into a what?
The support level.
Exactly. Exactly. Now, isn't that beautiful? I'm not saying that all trades like this are valid. What I'm saying is that when you look out for things like this, when you look out for points of support and resistance, and you see some that are very clear to you, they become your AOI, your area of interest, right? And now, for you now, okay, sorry, aside from this being a support and resistance zone, do you guys know that a break of structure actually occurred at this point? Yeah, a break of structure occurred at this point because these, just like we said, this seller structure, from here now to here, seller structure, Abby. Then we now have buyer structure now, moving from, sorry, let me just, we have buyer structure, which broke above this seller structure, right? So we have a break of structure. Aside from that one being confluence number one, I mean, I've already started talking about smart money concept too. So let's be, yeah, paying attention. So aside from this seller structure being broken by this buyer structure here, we also have a resistance zone, which turned into a support zone, right? And we also have one more thing. There's one more thing that I'm seeing in this zone now. Who would help me out? There's one more thing. There's one more thing that I'm seeing, which is another smart money concept key initiative or key confluence to look out for. Okay. Do you guys know what this is? Somebody said liquidity. Now, do you guys know what this is? Do you guys know what this is? This is called a fair value gap or an imbalance. Can you notice, or do you notice that there were no wicks? The wicks didn't look at the wick from this first candle here. Look at the second candle. There is a whole space in between this candle, and you now have a third candle. 1, 2, 3. Right? No wick. There's no wick here. There's no wick here. There's a resistance zone, which is obviously telling you it's going to turn into a support zone. There's a break of structure, and you also have a fair value gap all at one point. Yeah, this place is called a fair value gap, where you have the wick of the candles, where the wick of the candles do not meet each other, where there is just an empty space in between. It's called a fair value gap. So this is what I mean by area of interest. So you understand, you can still do more research, right? This is your resistance zone turning into a support zone. This is your break of structure, and you still have a fair value gap. So what do you think? It's very clear. These are key confluences that tell you that, okay, price is still going to continue to the upside, and price is also going to use this zone to continue. Now, knowing this, right, you can now, because of entry, because somebody asked what's the difference between break of structure and change of character, or some people call it market structure shift. This is your break of structure, very clear. It's telling you that, okay, I've broken structure to the upside. Look for buys, right? As simple as that. Now, if you go into the 1 hour time frame, you could see something like this. Right, this is your zone. Obviously, when you're looking for change of structure, change of character, you'll be looking at it. Or rather, you'll be looking for it in your zone. So this is the zone. Just like I told you guys in the lab, if you're so sure of your zone, that is very is much. If you're so sure of your zone, it's much better that you just what? It's much better that you just when price comes into that zone, just buy. If you're so sure, right? Is if you're not sure when price comes into your zone, you'll not be like, I want to look for change of character. I want to look for market structure shift. I want to look for this confluence or that chart pattern or that candlestick pattern whatsoever. But no, right? Yes, this is your zone. You've done your analysis. You're sure of this zone. You come into your 1 hour, right? Obviously, when you saw this is an engulfing candlestick, right? Yeah, this on the 1 hour now. This is engulfing now. This was the last red candle to tap into that zone. This green candle engulfed this red candle, right? The power, the candlestick, this green candlestick engulfed this red one. So that's one of your candlestick like patterns, right? The engulfing candle. Now, what is change of character? Let's go into the 15 minutes time frame to see if we can get a clear change of character. Now, for people who are asking, remember our trend, how to observe our trend using the paths or identifying your higher highs, your higher lows, and the rest of them, right? This is 15 minutes time frame. Remember when I said change of character, market structure shift, and the like is mostly seen on the lower time frame. Break of structure, prioritize your higher time frames, as simple as that. Now you're seeing your, let's take the paths, right? From this high to, let's say, this low. Here will not be your words. Here will be your words. Lower high. Here will be your what? Lower low. Here, lower high. Here, lower low. Here, lower high. Here, lower low. Right? From this point until this last lower high is broken, you've not observed your change of character. Right? You've not observed your market structure shift. You've observed nada. You've observed nothing. Now, you have this, right? Then you see markets come here. It's more like a high. From your lower high and your lower low, you have a high, you have a low, right? This broke above this zone, so you have your higher high and you have your lower low, and now you're having a new higher high, right? So from this point where this lower high turned into a higher high, that's where you can say that, okay, you now have your change of character. Do you see it? Let me just take this out. I don't know, I feel I should take this out so that you see how it broke it, right? And that's what most people say, that until they see a change of character, and that's when they'll be comfortable to buy. This is your change of character. Notice that immediately after a change of character, this would have been your this would have been an OB. If you're looking, this was most likely your OB, right? Which this was okay. Market was moving, it stopped at some point. Let me just enlarge this. Market was moving, stopped at some point. It brought out this leg, then used the momentum to give you the change of character, which means to give you a higher high, which traded above your lower high. This is your lower high, right? I'm not just mapping it, I mapped it in the previous class. So if you are not there, I mean, this is quite self-explanatory. I do it now and the rest of them. So ask your colleagues also for clarification. So this will be the leg which gave the momentum, which broke above this lower high. So now lower high traded higher high. This one giving you a higher high, traded above lower high. This is your change of character. Now most people will say that, okay, once they see a change of character, they are good to go. So once they see the change of character, they see the other block, right? The other block is simply the block with the most momentum, or the block that brought about new orders to be formed. So you can see that market was moving here, a block was formed, or rather a new leg was formed with a momentum move or with an order flow. They call it an order flow. So you can see that market was moving, nothing much. But after this new leg was created, it had a type of flow which broke a significant level, which was the lower high. It broke it and turned it to a higher high. So now this order flow now, where did the order flow start? Here. So that's why they do call this kind of zones your order block, because that was where the order flow started from. Right. Okay, let me just use this as an example. Now, this back to this daily, right? You can see that here, markets moved. Look at this first leg, this first green candle, right? Let me just take this out for just for clarity. Now look at this first green candle. First green candle, Abby. Second green candle. Right, thank you. You see this first green candle, it did nothing. You see the second green candle and this one now. You can see that, okay, sorry, rather. If this is a seller structure and this is where I started from, this guy now did nothing. This green candle did nothing. But you see this candle now, you can even say that it was this candle proper that broke this one. So that was where the order flow started from. The order flow that significantly broke a significant seller's structure level or seller's level. This was the buyer structure order flow, or rather where the order started from to flow, which actually broke a significant zone of the seller structure. So that's why here now will be considered as your what? Where that flow started, where that flow started, which significantly broke this seller's zone. That's where will now be considered as your what? Your order block. Because that was where the order flow started from. Same goes to why in the 15 minutes trying to establish what change of character is. So yeah, after you've picked out, after you've picked out your legendary zone, right? You now have yeah, this was it. So you had your change of character at this zone when your lower high turned into a higher high. So this was the flow which did that thing. So that's why others were picked from here. Boom. So yeah, that's the whole force about the change of character and the market structure shifts. Change of character can also be called market structure shift. And break of structure, it's good to use it's good to classify anything you see of that sort on the high time frame as the break of structure. All right. So let's go to pounds USD. I want to let's look at strictly
Sir, please, I have a question.
okay, questions. Okay.
So, can we say after every break of structure, resistance levels changes to support levels?
After what?
Every break of structure.
Mm.
Can we say resistance level turns to support levels?
No,
It doesn't happen like that.
it doesn't work like that. It's if you see a zone, right? Okay, where am I going to use for example now? Okay, let us look at this pounds USD. Look at this. Can you see that there was a break of structure here? Do you know that there was a break of structure here? Sorry. There was a break of structure here, right? Right? There was a break of
Yes, sir.
structure. Yes. So can you see that there was no significant support level? Like there was no significant support level for you to say that okay, the support, assuming something like this happened first time, maybe around here there was a support and around here there was a support. Then after this break of structure, you'll be considering somewhere around here. Okay, let me just draw something. Like let's say this move now that went up came down all the way here, right? And this was a whole push up. First push up came down again, second push up, then broke structure at this zone, you know. Then this points now around somewhere around here now. That would be where you will now consider that, oh, once this break of structure happens, once price comes around here, it will now start falling. But no, it didn't happen like that. So there are different case scenarios. I'm just telling you, what works. Different things works at different times, right? So you can see that this one now was a break of structure. But you can already see that this was where the break of structure started from. This green block. This was remember what I said about order flow, right? So market was moving from all the way here. It stopped. It was unable to break this structure. Then all of a sudden, it brought out a new leg. Then the order flowed from this high all the way down to this zone, breaking the structure. So this was where the order flow started from. And when you see this type of order flow, especially on the higher time frame, you now know that, oh, this is a break of structure, and this is where the order flow started from. Once it is an order flow, where it started from is now called your order block. So once the price now comes to that order block, you are now free to like engage in holding your position, that kind of stuff. So it's not anywhere you see. It's not that. What the question you asked, that is it a necessity that if you see a break of structure, you also see what resistance, Abby, or support? What was your question again? Sorry.
My question was, after every break of structure, does resistance level change to support level?
If that break of structure incorporates a significant resistance level, and mind you, a resistance level will not be one touch. A resistance level is more than one touch. So let's say 2-3 touches. Like you see a significant zone, and when you're talking about break of structure, remember to prioritize your high time frame. Because if you're seeing anything on the lower time frame that is touching 1, 2, 3 times, and you're thinking that one now is break of structure, it's not break of structure. Use your daily upwards for significant break of structure. So if you have like just one touch, that is not a resistance or a support zone. But if you have 1, 2, 3 touches, because okay, let me just use this as an example now. This one now is BTC, right? This is where I was before we left. This is 4 hour, right? I spotted this support zone on the 4 hour time frame. You can see it. This first touch moved up, came down, touched it again, second touch, moved up, came down, touched it again, third touch, moved up. Can you see what I'm talking about? This is 3 touches, more than 3 touches, sir. This is 1, 2, 3, 4, 5 touch. After the 5th touch, it now broke it at this zone. This is where you had your break of structure. You understand? Then all the way to this place. So obviously, when you see, okay, resistance, support, turn to resistance. How about now? This is where you now say, oh, I want price to like, this is your order block, as a matter of fact, because this is where the order flow. After this whole support, this is where the order flow now started from, flowed all the way down and broke this structure, broke this thing that looks like a wick. And do you understand? But look at it on the daily. That's why I said prioritize your daily time frame. Now, can you see how it is on the daily? It came here, first touch, went up. Came here, second touch, went up. Came here, third touch, went up. Then, boom. Came here now. This is even like the, okay, first, second, third. This is even like the 4th touch, right? Because this is too weak. This body did not close below this body, if you can see, right? Then he had to bring out another candle at this point to now do what? To now break this structure. This is where the break of structure happened. You can see it. This is the previous structure. So the break of structure happened somewhere around here. And mind you, if you zoom into this thing, you see that this nigga now did not break the structure. Ideally now, most people, they'll be like, oh, this is where the break of structure happened. And I mean, it could be there. Who knows? I'm actually not taking cognizance of it, right? It could be here, but from what I'm seeing,
Which nylon? White.
Okay.
So from what I'm seeing here, you know, this is your area of interest. That's what this is called. I'm not saying it is 100% big or it is 100% everything, but this is your area of interest. You're seeing price, doing some significant support at that point. Do you get what makes you so sure that okay, it won't even use it as a resistance to keep on going down? But now looking at this on the looking at this on the higher time frame, I'm actually more interested in this zone now than this zone. Ask me why. This is just your look at what you say about what we say about this zone. What you say about this zone? What you say about this zone? What you say about these zones? All the way here. Market has used this zone as a type of resistance zone at some point. Resistance came here, used it as a support, came down here, used it as a support, came down here, used it as a support, like very, very heavy stuff, right? And all of a sudden is now somewhere around here again. So I mean, even if I'm to bank on this, if you were to bank on this now, would you say that this area of interest, which was this one that was here previously, this one and this one now, which one do you feel would be of more like relevance? Obviously, it's this one, right? So I mean, if we lose sight of it, then we've lost the money even before we started trying. So BTC is actually like moving up now. And also another thing, chart pattern is also very important. This I showed you guys chart pattern yesterday now. This head and shoulder pattern. Look at it. This head and shoulder pattern. This right shoulder, head. This is the head. This right shoulder. This is the head. Right. This is the left shoulder. And this is the break of structure. Who is unmuting your speaker? Their speakers. Please mute your speakers. And this is the break of structure. Or rather the neckline. Sorry, this is the neckline. The neckline around this, which is also your break of structure, or not just Uibo, or not English, right? So just because of I was opportune to, analyze this with you, I'm now seeing this head and shoulder pattern, which is called a what? It's called a reversal pattern. So there's no way that this zone now, which also happens to be within the range of a predominant resistance support level. There's no way that this zone now will not hold price. Do you understand? So this is just what we mean by area of interest. Then there's also and also chart patterns. I mean, we are still saying the same thing all over and over again because these are the things that you need. These are the things that you need. Is if you could, tick these boxes every single time you get to open your charts and look at your charts. I mean, what are we saying now? It's not by indicator. I don't even know what indicators, I don't even know what those things are. Seriously. Okay, look at this line chart. I'm sure all of us know this place now. You can get your holo candles. This is what your holo candles look like. You can get your line chart. This is what your line chart looks like. Right? So even in this line chart set, you can see this zone, how market has tested it several times. Market tested, okay, look at it now. Look at how it looks like in the line chart. This is it. This is it. See it now. Markets tested it at the zone 1, resistance, 2, resistance. It came to do like resistance here, turned into support, used as support, came down here, used as support, came down here, used as support, came down here, used as resistance, somewhere around there. It's created what? Head and shoulder pattern. This is the right shoulder, head, left shoulder, still that same zone, used as a resistance to bring price all the way here. So what are you saying? It will just come back here again and continue its stuff. So I mean, this is smart money concept. This is what you need. It's not the noise. Then obviously when you okay, let's look at this trade, right? So as you can see, this is more like a support zone. You can see that price came here, you know, price came here, tapped into its first, second, third time, you know. At this point, you can see it's support, 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 even here, support, support. But the overall stuff, right, is we're in a very bearish. We are bearish right now, actually. We're very much bearish right now. I'll show you why. I'll show you why. But let me just take out all the joints. Okay, so before I proceed, I beg, because me self is looking as if all this talk that I'm talking is confusing my head. Dr. Bells, do you have something to say?
Jambos. Nothing. I forgot that. When I've forgotten the question I wanted to ask. It was about the head and shoulder. I was a bit confused, but I'll check the last class to get it because I slept off the last class, so I'll check it. I'm just
Okay, I
following
said
the
that I talked about reversal patterns and head and shoulder was one of them. All right. Now, if you could look at this point, you're going to see a head. This is somebody's head. One of you's head. His head. This shoulder. Left shoulder. This right shoulder. Did it make sense? Dr. Bells, did it make sense?
Yeah, I get it now. It makes sense. So,
Yes.
like, what does it indicate?
It's a reversal pattern. It's one of the other reversal patterns. As you said, you check the class. When you check the class, you're going to see it. So when we are saying that we are bearish and we are seeing the head and shoulder pattern, it's just telling us that okay, we are saying that okay, price is actually going to reverse, price is going to fall, right? Somewhere around there. And the head and shoulder is telling us that oh, you guys are on the right track. So chart patterns, they are reversal patterns, they are continuation patterns. So you should check the previous class and just familiarize yourself with those contexts. Yeah. So as I said before, I asked Dr. Bell something. Are we following? Because to me, I think because I mean the last class, somebody drew me back and was like, "I'm moving too fast," and I apologize for that. So don't be shy. Ask your questions. I mean, I'm sure that I've done justice to the very because today is actually meant to be about indicators, but as I said, I don't know if our technical lead analyst is still on this call, but if he has never used indicator, we are tight like that. In fact, all the instructors who taught me on GIDA, because as I told you, I'm a graduate of GIDA. Thanks to GIDA, I'm a graduate from one of their cohorts, and no, nobody has used indicators so far. We don't do that because I mean it doesn't give money, it doesn't pay, except for people who incorporate it in their trading puts. Those are for people who use AI to trade. But when it comes to fundamentals and technicals, indicators are like way out of it. So instead of me to be telling you guys about indicators, which is significantly useless, why not hammer on what actually makes money in the industry? So that's why I'm still talking about this stuff because these are the things you need to be looking out for, right, in your trading journey. So, any questions you don't understand? I was too fast. You need clarification on something. Please, before I move to the next stage, because I mean, this thing that we are doing is very technical, and I understand how it could be sometimes.
Okay, please, I wanted to ask a question.
Mm-hmm.
And my question goes like this: how can someone spot a good buy or a good sell through the chart?
That's what I've been explaining now. Have you been in this class from the start?
Yeah,
You
no,
you
it's a bit confusing for me.
Yeah, I understand. But you understood what I said about area of interest.
No, that's the part I don't even understand.
You understood what I said about break of structure.
Yes.
You understood what I said about order flow.
Not really, I didn't really get that one very well.
So when you have an order flow, you automatically have another block. And what is another block? Another block is where everybody who is a trader wants to take their orders from. Your orders are your positions. That's according to your question. That's where you want to take your good buy from or your good sell from. Right? And I'm going to show you something real quick using this same BTC that we are on. Now, this is BTC, right? Pay attention. This is your buyer structure. From this low to this high, somewhere around here is your buyer structure, right? Let me just take this out. This is your seller structure. From this high to this, right? Okay, before this head and shoulder form, let's go before this head and shoulder form to this low, right? Is your seller structure. Are you paying attention, Rosemary, right?
Yes, I'm following.
Awesome. Now, what did I say about when your buyer structure or when your seller structure breaks your buyer structure? What did I say happens? In the beauty of what it just did, what is it called?
Okay, from the break of seller structure, the market starts going up and you can buy.
You can buy. This is what I said. This is a buyer structure, right? You can see that it's majorly buyers inside this zone now. This is green candle. It's signifying you buyers. And here now is your seller structure. This is red candle signifying you sellers. And when this seller structure breaks this buyer structure, it trades below this buyer structure. What now happens? In your own understanding, you don't have to post it word for word.
Change of structure.
Change of structure.
Yes.
Okay, actually, it's actually called a break of structure, not change of structure.
Okay.
Right? So it's called a break of structure. So this actually shows that you're following, or you're just, you're new in the game, and the terms are quite, the terms are quite a lot. With time you're going to get there, and the whole stuff is quite a lot. But I'm seeing that you're following, and I'm actually happy about that. So you're just having one or two issues understanding one or two stuff. Now, mind you, this seller structure, this is how it went. This is the high, right? All this is your seller structure. Rosemary, I'm talking to you. Other people can listen.
Yeah.
All this is all this is your seller structure. Now, this seller started moving from here. They were moving. Sellers were moving. Sellers were moving. Sellers were moving. They were in control. They were in control. They were in control. Up until this point. Now, when I'm telling you sellers were moving, I'm not talking about the weak. I'm talking about the body. Do you understand what weak and body is?
Yes.
Awesome. Now, up until this point, you can see that buyers entered small. Abby, this is all of this is still a seller structure, but inside that seller structure, buyers entered small.
Yeah.
But it's not that buyers entered small. It's more like it created a new leg.
Yeah.
So okay. Now let me just ask you this question. From this point now, right? Has this structure been broken? Has buyer structure been broken? This from here now to here now. Has buyer structure been broken?
It's still in the seller structure.
It's still in the seller structure, but was from here now? All these are seller structure, but was he able to break below this buyer structure?
No, it's still in the okay.
It's still within the range of this buyer structure. So
Yes.
it had to create a new leg. So let's even say that okay, a new seller structure now even started. Let's use that whole like ideology. After creating the new leg, you now notice that these new sellers now came, now them now go, we can break this zone. Do you understand? They are the ones now that broke this buyer structure.
Yeah.
Can you see that these people now broke below, like they traded below this this whole buyer structure with body close, not weak. They use body to close below the buyer structure, creating a what? Break of structure. Now, look at the trick here now, or look at the solution or the answer to your question. You see from this zone now, from this high now to this low now, that actually broke this buyer structure. That is called your order flow.
Yeah.
Yeah, so this is what is called your order flow. So order flowed from here now to here. And if you go and check where the momentum, or rather this order flow, where did it start from? Shebina, this high, ba?
Yes.
Thank you. You map out this high. That high now is your order block. So how you ask, how can you take a good buy or a good sell? This is where your order flow started from, which broke your structure. The high is your order block. When price comes back into your order block, you sell. And assuming you sold, you'll be making money. It's as simple as that. I know that it didn't actually use the high. Actually, it took liquidity from the high, because if you go to your 4-hour time frame, that's why you have to understand all these things perfectly. Or even, I think was it on the, that thing was quite clear on the, I think it was on the 4-hour. Yeah. Now the it took liquidity from here because of the predominant support and resistance zone. Look at the okay, look at this zone now. That's why I still tell you area of interest. I asked you, do you understand what I meant by area of interest? You said no. If you look at this zone, you're going to see resistance at these 2 points. Can you see anything here? Can you see that price? Can you see that these points now? Can you see that this point now resisted price? Resistance means your ceiling. It means the top, your ceiling. Support means the down, your support or your floor. Now at this point now, right? This zone now resisted price. It pushed price down first time, Abi. Price tried to come back inside. It pushed price down the second time, Abi. Then the next thing, you're now having a break of structure at this point. And also, obviously, if there's a break of structure at this point, obviously this zone too now, this same zone broke structure too at this point. So I mean, it's a one in all break of structure. It broke all the structures. Now, this is your high, which brought about your order flow, which actually broke it. Who's calling me? Sorry about that. Now, this high is the high that brought about the order flow, which broke this structure, and the high automatically is your order block. But because of this predominant area of interest, or rather support resistance, look at it, look at resistance zone. As price also already knows that this is the this is the order block. But because of power, you know that there's something called power jam power. It is not disputing the fact that this nigga now broke it. It's not disputing the fact. It's just telling you that, Haba, me, I want to go and enter area of interest. I want to go and enter my forefather's zone. I mean, look at his forefathers. Before this one came into existence, see his father now. His father fell down from that zone. See his grandfather. His grandfather fell down from that zone. So it's just like And I know that this place is my order block. I'm supposed to fall from here, but let me just go and follow my ancestors and do what they did. So that's why he just came into that area of interest. Gogo tapped into it, still used the order block. This is the order flow. This is where the order flow started. Your order block, still the order block proper. So now 4. Did that make sense?
Yeah.
With time, with practice, you understand better. So now, moving on to the next stuff. Let me just delete all these things. Or somebody wants to ask something else. Or it's clear on all ends. Hope it's clear. So moving on to the next stuff, I'm going to be discussing pullbacks and inducements before we round up for tonight. All right. Tomorrow is actually my birthday, so I want to have a good night's sleep. And that was why I joined quite late. So I'm sure you guys will allow me to leave. So I want to talk about inducement, liquidity, and what again did I say? I want to talk about pullbacks. So you could jot down pullbacks / reversals. We are going to be talking about pullback / reversals, and we're going to be talking about inducements / liquidity. Pullback / reversals and inducements / liquidity. Now, still using BTC as case study. Inducements are simply known, inducements or liquidity, or rather, yeah, or no, let me use inducements. So inducements are mostly known as your early buyers or your early sellers, right? They're mostly known as your early buyers or your early sellers. So if you cannot spot inducement, you become inducement. If you cannot spot liquidity, you become liquidity. It's as simple as that. So let me show you guys something. So we have on the weekly, right? We have a break of structure around here, right? Somewhere around here. This is our break of structure, obviously, this seller structure. I mean, I don't want to keep on doing this, but let's just keep on doing it until I'm sure that everybody is like already catching on. So this seller structure, this buyer structure. All right. Yeah. Yes. Seller structure, buyer structure, broke above. Buyer structure, broke above seller structure. And we're about to do something now. We're about to observe where can you call your, I mean, we've talked about order flow now. So what I want you all to do now, I'm on your group chat. Go to this chat because I don't expect that I'll be teaching technicals. Like I'll be teaching. Let me not bite my mouth too. I'll be teaching strictly technicals, and you all will not be on your TradingView platform. So I want to be sure that you guys have actually been following all I've been saying. So go to your group chats. I'm actually there now. On this weekly time frame, show me where the order flow started from. The order flow, not just any order flow, the order flow that actually broke this structure. Now I have about 45 persons, 40 to 45 persons on this call. I don't want to say anything less than 30 screenshots on that group. Now, the order flow that actually broke this structure on the weekly time frame, go and map it out Obviously, if you're mapping out where the order flow, which broke the structure on the weekly time frame started from, what you're showing me is your order block. So go and show me where your order block is now on the weekly time frame on your group chat now. Is the instruction clear? Is the instruction clear? Is the instruction clear? Or somebody feels that the question again? No. Haba now. Haba now. You guys sleeping with me here. Now I said this is your weekly time frame, right? This is a break of there's a break of structure on this weekly time frame. And I said a break of structure can only occur if there is another flow, right? Yes, I said that. I said it not once, not twice. Now, whenever there's another flow, when we want to check where the other flow started from, what we usually check is we'll map out where the other flow started from, and where that other flow started from becomes your order block. So I want you guys to go to your trading view now, go to the weekly time frame. I've already established the break of structure for you guys. You can see it on my screen. So just go and show me that other flow now that broke that structure. Go and show me where it started from. Map it out using your rectangle tool. Map out the other block and show me. Hey, be smart. On your group, oh, go and map it out now and paste it on your group. Only one person has shared. I expect nothing less than 30 replies for this assignment. You must not be correct. That's why I'm here. But this task now, you all must do at least 30 screenshots. Well, I'll just go. I'm waiting. I'm seeing only one on the group so far. Use your own chats. This person that I even posted on the group went to use my own chats. Use your own chats and show me where the order flow started from, the other flow that broke the structure. Go to your own trading view, map it out and showcase it on. Don't use my own. This John CFD. Don't use my own chat. Use your own trading view chat. Show me where the order flow started from. What is this confidence doing again? See, people are not here in English. I will make I speak pidgin. Use your phone. Use your phone. There's no way I'll be teaching trading. I'll be teaching technicals. There's no way I'll be teaching technicals and you will not be able to open your trading view on your chat. If it requires that you leave the call, you don't even need to leave the call. Once you minimize, see somebody's asking me is the daily time frame. You can see the time frame there on the screen. There's a break of structure already, you know. So I told you guys that for a break of structure. Right. I said that once you notice the break of structure, there is another flow that actually brought about that break of structure. There's another flow that brought about that break of structure. And where that other flow starts from is called the order block. This is the weekly time frame. Map out that other block, where that other flow started from. Map it out and show it to me on the group chat, on your group chat. I'm seeing okay, I'm seeing some replies now. This is how we get things done. Oh. If you like, be hiding behind the curtains. You think, I don't know what you think, but I'm sure that after maybe next tomorrow, you won't be hearing from me again. So it's either we get it done now that you see me, or I really don't know. I say I expect nothing less than 30 replies. I'm seeing so far 1, 2, 3, 4, 5, and even inside the 5 is only 4 that is valid. One person sends rubbish. About not less than 30 replies. Not less than 30 replies. He's already 10, 10, 13. I mean, I really want to finish up. We're just looking at 2 areas: inducement slash liquidity and pullback slash reversals. I'm not meant to waste time here, so let's not waste our time, please. Anyways, I don't want it to look like because of some serious people now be part of people now who would face consequences of not learning what they're supposed to learn. So far from the group, let me, because now I want to call result too from the few people that responded to what I asked. I want to call results. So these already 10, 15. I don't want to waste more time. So the only person that I'm seeing here that has done something okay is Mr. Hush. Please, who is Mr. Hush? I feel like doing giveaway this night because I really
Yes, sir.
you're really motivating me that you're like paying attention to, because paying attention is key. Paying attention is key. You cannot miss it when you're listening. I mean, we are not beginners. We are also not illiterates. If you pay attention to everything I'm saying, you jot down when you feel is necessary. There is no way a question will be asked and you miss it. I said there is a break of structure. Before the break of structure, there is always a major order flow, which brings about the momentum that breaks the structure. Where that order flow starts from, where does that order flow start from? Map it out, that's your order block, and show me. Simple. And some people are not even responding. Some people are snapping. I don't know what some people are screenshotting for me, going to 4 hour. We are talking about weekly. Some people are going to 4 hour and sending me 4 hour chats. Eh? So, Mr. Hush, I'm really, 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 really proud of you. I'm really, really proud of what you did here, because obviously this like, I mean, this is awesome. This is awesome. That is where your order flow started from. The order flow that broke that structure. That is where it started from, and automatically that becomes your order block. There's no two ways about it. Automatically that becomes your order block. So which bank do you use? Call it out ASAP. Let me appreciate
Yeah,
your
okay, sir.
diligence. Okay, okay. Awesome. Call it out for me.
90
90
54
54
4
9054
84
84
376
076
8376 7.
8376. Chinedu.
Yes, sir. Thank you, sir.
Well, I really, because like this now, you're the only one that just made me smile, because I will not know how I'll be teaching something and nobody is even following up. It's very, it's very heartbreaking, but nevertheless. So let me just show you guys what I said. I said that this is a break of structure, right? This is your seller structure, this is your buyer structure. Your buyer structure broke your seller structure to the upside. Now, there's always another flow, an order flow, which breaks the structure. Where does it start from? That becomes your order block. This is your order block, right? Look at it. Market was moving here. It stopped at this point. But let's go to daily so that it will be like clear in everybody's eyes. So market was moving. It stopped at this point. Brought out a new leg. After I brought out that new leg, what happened? Boom. It broke structure. This was the order flow that broke structure. And that automatically becomes your what? Your order block. This is your order block. So now, what we call inducement is early buyers or early sellers. Now, since this is your order block and price has not yet come here, these people now, who do you think they are? Since this is your order flow that broke structure, automatically being your order block, because this is where the order flow started from, right? And these people now are the people that bought early, right? These people now, you can see that some people, these buyers now, market started moving up from here. So these are your early buyers. What are they called? That's them. They are called inducements. They are called inducements. When you hear about inducements. Now this thing be the inducements. As simple as that. And that's why they say market move from liquidity to liquidity. Inducement is also a form of liquidity. It's a form of money, because for people to buy here, it's money that they used to buy now. Do you understand? And now them, they think they are safe, but they don't know that they're inducements, because this is where the real OB is. This is where the real order block is. So once price just come now, I think price want to react from this zone, this our zone. Once it just reach here now, reacts from this our zone here or somewhere around there, comes down, it will just take them out as inducements. Now come to this real OB, use the OB to start doing what? To start going up and take out this high. So that's what we mean by inducements. Inducements can be seen in a lot of places, back to back. Or look at this other example of inducement. This one is pounds USD. Look at it. You can see this zone now. You can see markets moved at this point, right? Came down. Anyway, you're going to understand it better when I teach reversals slash pullbacks. Now, what are reversals slash pullbacks? Let's go to the monthly time frame. Now, let me just take out all my drawings. Now, there are different type of inducements. There are some inducements. Okay, if you look at it now, look at it here now. This look at this zone now. Now, it was this zone now originally. It was supposed to break structure, Abby. This move now was supposed to, it wasn't able to break structure. This is the zone that broke structure. This is the place that broke structure. But if you look at it, so you see that they are still early buyers. They are early buyers. This is your engulfing candle, right? I don't know how to explain it so that everybody will understand, but this is your break of structure. There was a break of structure here, somewhere around here, right? And now this whole zone has not been tested. But these people now, They bought early. They bought early. Do you understand? They were part of the people that broke structure. But they were not thinking that maybe they are safe, but no, their inducements, their liquidity. Now, price had to come back, take them out because they bought early. Look at this massive engulfing candle. They saw engulfing candle, they now feel that, oh, let us buy fast, fast. They now bought. Market has not even tested properly into the other block, right? They just did what? They bought at this zone, they bought early. So markets came, took them out, used them as inducements. After using them as inducements, look at them. They are early buyers. Early buyers are called inducements. Right. After price took them out as inducements, it used the major OB to now push up. So you would have been waiting, you would have just put your OB here, go, go, go. They wait for them. Because you obviously, this thing's obvious now. You just see it. This engulfing candle. Obviously our low. Markets, if markets wants to come down, as I said, if market wants to use support, market will use support. It's not, it will use mid loss, it will use support proper. So this was supposed to be your support zone. Do you understand? Your area of interest. If you look at this place now, you see that market has used these points now to push price up before. Came down there again. It started to push price up again. Use it to break structure. But you can see early people now that bought early, they're called early buys, they're called inducement. Price had to do was come back, take them out. Now use the major proper support to push up. So you now that knew that these people were inducements, you just keep your OB below them, below inducement. Once it came here, you strike. Sorry, I'm going to bring long position. You just strike, you just enter this low, 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 low. You can even use change of character or market structure shifts, like somebody made us understand earlier, to get a cleaner entry. This high, go, go, go. This high is very okay for your TP. Take your TP at this high. Stand now 8 points, 8.8 risk to reward ratio. That's a very nice trade. So still on that, a market cannot move without reversal. The markets in total cannot move without reversal or pullback. Right? Now look at this move. You see this move? This move now from this low to this high. Do you notice this thing that is coming back here? This is your pullback. Your market has moved fine and good. But what then? It's not just market trends. That's why we keep on saying higher high, lower low, lower high, higher high, lower high. We say lower low, lower high, because that's just it is like programmed to be like that. Do you understand? Even gold that you see sometimes is to be rushed, to be flying up. Sometimes it still breaks for what? For reversals or pullbacks, right? So now you look at this trade, you see a move. This one now, this red move all the way down is what it's called your pullback. You see another move. Now, another thing now that will even give you much more confidence or much more confidence that these people are inducements is what? This is another move that broke previous structure. Obviously, it cannot just keep on moving like that now. What happens? Pullback. Market has given you your pullback, or rather your retracement. So there's no market, there's no move, there's no moving up or there's no moving down without a pullback or without a retracement. So you have this move, the pullback or rather the retracement. You have another move, it has to pull back or retrace. You have another move. That's why you see markets coming down. And that's why you saw me. If you had been following this class earlier, you would have seen that I had already entered this trade. I cut this trade from somewhere around here because I knew that after this move, the next thing that will follow it is a what? Is a pullback up onto this zone before it will now like decide to go up again. So I don't know if the whole explanation about pullback and retracement is clear. I'm gonna run. It's already 10:30. So questions? Princess, let's hear you.
Good evening. Good evening, sir.
Mhm.
Does retracement liquidate people?
That's why I said try not to be liquidity. In other words, try not to be inducement. Do you understand? Now I said if you looked at this particular move now, You understand? This move now from this low to this high. Remember, this is the monthly time frame, so this is massive. This move from this low to this high, right? You can see that there was you can obviously know that this is a move that broke previous structure, and the next thing that will follow it is a what? Is a pullback or a
Yes.
retracement. Now,
Yes.
seeing this zone now, are you going to say that, oh, you will not keep your other block here? You not say that, okay, I want price to retrace and to pull back or retrace and stop here and continue going up? Won't your common sense tell you that, okay, this price is going to take out this early bias as which, let me not bite mouth. Won't your mind tell you that, okay, or your common sense tell you that, okay, this pullback is actually going to take out this early buyers who are inducement and
Yes.
who are liquidity? So this is the simple thing that I'm saying, that for you to be conscious of you not being liquidity, or of you not being of you not being inducement, look out. Don't forget, remember, use your higher time frames. Don't forget to spot out or look out for your pullbacks. If you're always conscious of your pullbacks and your retracement, you'll be cautious of where early buyers or early sellers are, and you will get liquidated. That's why I'm teaching it. Right? So
All right. Thank you, sir.
we have Richard. Richard,
Good evening, sir.
evening.
Good evening. Sir, please, I wanted to ask, like, from this low you marked out, that you said that was where price started pushing up from. So does it mean that for every high it makes, it must come down, like it must pull back to that low again before it move up again? Did you get my question?
No, I didn't get your question.
I said this low that you marked down here, does it mean that for every pullback, price must come back there before moving forward, before moving upwards?
Okay, like price must come back to that same zone, to that exact
Yes,
same zone.
must
No,
price.
no, no, no,
Yes,
not to that exact same zone, but price must pull back after giving you a significant move, especially a move that breaks the previous structure. Okay, let me use this BTC as an example, since it's just on its own, and let us use daily, because daily is still part of your what do they call it? Daily is still part of your higher time frame, Abi. Yes. So look at this now. Okay, look at this one. So you see this. At this point, we had a break of structure, Abi. At this point, we had a break of structure somewhere around here. You see from this low now to this high. Do you know that that is your pullback? Now, you now have another break of structure here. Now, you can see the market is going back up. Now, what do you think it's doing? It's giving you your pullback. So no matter how little it is, there's no move without a pullback. It's impossible. Okay, look at the bigger picture. This is the bigger picture, right? We had this move. This was the move that broke structure, and we have this as our early buyers. Can't you see that this market now is giving its own pullback? This thing now is doing a nice pullback. Once you do this pullback now, reach here, it will take out inducement and do what? Use here now to start buying. Go and check any chart. Go and check. I'm giving you the like. Go ahead. Go and check any chart. Okay, look at this. Look at this chart now. Look at this chart now. This is USD JPY, Abi. Now watch this. See this move back, this low now to this high. Do you see pullback? She has seen pullback, Abi. This weak low. Look at this move. See move. See the pullback, Abby. See another move. See the pullback, Abby. And now, when these things are giving you pullback, what does he expect? Okay, look at this first move. It broke structure, sharp. Because this thing is weak and this body. This one broke structure. It gave you pullback. After the pullback, what is expected? It's expected to break that as after it gives pullback. What next? A new move that breaks that previous structure. Right? Now, it gave you a new move that broke previous structure. It came back, it gave you the pullback, using here as inducement. Because that's why I said always be cautious of your inducements. It gave you the what? It gave you the pullback, using here as inducement. After it has given you this pullback, what do you think will happen next? Don't you know that this market now that is moving itself must break this high? It must break this high now. Because it has already completed the pullback for you. It gave you a complete pullback here. This is the move. Give you a complete pullback here, taking out inducement. What is he waiting for? All these things is Shalaye. It will come and break it. It will come and break it. So that's just like one of the ways for you to understand what is going on. No, that's aside from using your break of structure, pullbacks from the monthly or weekly, daily. That's like the most fundamental way for you to understand the direction of the market. You can never go wrong with your reversals. And also, it's also good for you to take counter trend trades. Okay, like let's go to daily now. Let's go to daily now. Can you see? Okay, can you see this now? Look at this. Watch this one. And when you're looking at pullbacks, be very cautious and intentional. Now, this is a structure, Abby. I said mostly consider pullbacks for moves that break structure. Like that's like mostly when is more valid. Right? Pullbacks for moves that break structure. Now, this is a whole structure. This structure has been predominant. Nothing has broken it before. We have this move. It comes here. It looks like it's going to break it. It's not able to break it. It comes down. This one moves again now. Stops here. Brings out a new leg. What did I say about order flow? What did I say about order flow? Now, from this low now to this high, you can see that is where the order flowed. And where did it start? This is where it started. This is what I ask people to map out in PTC. This is where it started. And you see that this is the order flow that broke this previous structure, Abby. This is where it started, Abby. These early buyers, there are some early buyers around there. If I go to 4 hour now, you see them well. There are some early buyers around there. All these things that I see now, early buyers. Markets came, use them as inducements or rather liquidity. Came to what? Came to that zone, the major zone that gave you that order flow that broke structure. Use it as what? Obviously, this order flow now, this thing now that is coming back is pullback, because this is the order flow that broke structure, or rather the move that broke this predominant structure. Obviously, that's giving you pullback. What was the next thing? The next thing is for you to do what? It's for you to break structure. But notice that this thing was not able to break structure. This move was not able to break structure. So this pullback that this thing started here, after it moved, obviously obeying what? Obeying the order flow. Obeying the order flow, using the order block, it's traded new orders. Obviously, you'd have taken your TP at this zone, the high, right? Now, this pullback that it started here, it's used here now. It came here, completed it. All these things is still pullback. Yes, it's still pullback. Obviously, you'd have taken your TP here, but then again, I say, this is still continuation of pullback, right? Because all this things is weak. This body, this is the body, so it's still majorly pullback, right? We now see we are waiting for this structure to be broken. No, this structure has not been broken yet. We now see all this move. I mean, this move was unable to break this structure. We see this one, nothing. Then we now see this zone. This zone now does what? Boom, breaks this structure at this point. Right? This is another predominant structure. This move breaks the structure. Where do you think will be the what are they calling it? This obviously there was another flow here now. Yes, there was another flow here. This other flow now did what? Broke this structure. But where do you think the other flow will start from? This is where the other flow started from. This is where the other flow started from. This move now that broke structure.
Sorry,
That
sir,
broke
but why is there a gap in the chart?
because the chart wants to give a gap. Anyway, that thing usually happens when a new week opens, right? So, like during the weekend now, when the market closes and the banks closes and everything is on pause, if the market opens again, it usually sometimes gives those gaps, right? So it could be very confusing sometimes. Well, it's not really our business like that, like that. Okay, yeah, it's not really our business like that, because when I came to the 4 hour, obviously from the daily, I was like, oh, this structure has been broken. So obviously, this is where the other flow started from. Then remember what we said about inducement, that inducement are early buyers back or early sellers. And another thing that I forgot to tell you guys is that the OB, or rather the zone below inducement, like this now, if we go to 4 hour, this thing now that you're seeing as inducement. These people now, do you understand? These people now that bought at this zone, these people now they bought early. As they saw this push up, they bought. Some people bought at this zone. Do you understand? So when I came here, I just saw oh, this is what? This is inducement to this early buyers. And I said, okay, since this early buyers, obviously OB will be this low, right? All these people are still early buyers. You see these ones now, this week, still early buyers. I just put my OB below it and I was waiting. Do you understand? So when you see stuff like this, you're like, okay, first of all, this is your what? Your order flow, which broke. We are looking at predominant structures. So this was the first predominant structure before, which had not been broken. You see it here. See order flow. Order flow broke it. Gave you your pullback. You bought. Took your profit at the high. Sweet. Now see this one now. Another what? Order flow. Broke another predominant structure. You looked at it from 4 hour or any other lower time frame. You saw your inducement. It gave you your pullback. You bought. You took your profit at this high. That's okay for you. That's just trading. So you can never go wrong with your pullback and identifying your liquidity or inducement. They go hand in hand. It's together with other criteria which I've mentioned so far: your area of interest, your order flow, your FVG or your imbalance. I mean, I've mentioned quite a lot. And obviously in the next class, it's just going to be revision from me, because I mean I've done what I came here to do, right? So I'm still seeing Nuruddin. You want to say something?
Yes, good evening, sir. So my question is that when we are to like when we want to enter trade with
Mhm.
higher time frames, let's assume that okay, from the monthly time frame we've marked our market structures, then come to the weekly, and coming to the weekly we also mark the market structure there. And the daily now, can we also from the daily now, can we set out our order block from there and wait for maybe a reversal, or probably the next let me just say probably it's the order block, then going back up? Can we mark that as the higher time frames?
Ask your question again. I don't understand you.
Okay, my question is that let's assume that okay, I want to enter a trade with the higher time frames. So from the monthly now, I was marking out my market structure. So coming to the weekly to also mark the market structure if it is still the same trend. Then coming to the daily time frame now, then I mark my order block from there. Is that okay for higher time frame.
Why not? It's very okay now. But just know that when three time frames are telling you the same, like you go to your weekly time frame, it has broken structure on the weekly time frame to the upside. You go to your daily time frame, it has broken structure to the upside on the daily time frame. You go to 4 hour, you're seeing order flow and probably inducement or just order flow still to the upside. Do you understand? What is stopping you from taking your buy trade if not fear? So all these things need to be alignment. You not check, just like when I was explaining to Rosemary. Do you understand? You could see what BTC did there. You could see where that order flow started from, but it decided not to. It's respected the order flow. I mean, if you're someone that used to put your SL, like used to give SL space, that trade will not stop you out. But rather than accurately respecting that order flow, it went ahead to respect the area of interest, which was like that whole zone. So you have to put a lot of things into consideration while analyzing. But if you're going from monthly, weekly, daily, 4 hour, 1 hour, and all of them are telling you buy, and you see a very good, order flow, just use it to move, use it to like take your trade.
Thank you very much. You really answered my question. And one thing I noticed that you emphasize a lot in this particular section is that we are like it is very very good, and it will really help us to be making sure that we are starting from the higher time frame so that we can spot the right things out. Thank you very much.
Yeah. You're welcome. So who else is keeping me here? Any other questions?
So I talked about counter trading. You didn't go buttress on it.
What I told you is that all those pullbacks that you're seeing, do you think like we'll just let it slide? Do you think you will just let it slide? Obviously, you already know the criteria for taking an entry. You know when your order flow occurs, and you know when your change of character occurs when you go into the lower time frame. Use all those things to capitalize on the pullbacks. But if you feel that okay, you want to stick to the trend, which is my advice to everybody, don't go against the trend. But I'm sure that now that you guys know you guys now have the knowledge of pullbacks and retracement, and you know that there is no market that moves that will not give you retracement. Why not capitalize on the retracement? So I don't really have time to start. Probably in time to come, we could decide that okay, this week, this weekend, we want to do a live session for you guys. We'll now talk about all those ones. But for now, I've just told you like the basics of what you need to know. Those counter trades, or rather those counter trends or reversals, they are still supposed to be capitalized on. But entry is where you need some expertise. But that one is not an issue. Just first of all, it's just like you're making a bet. Do you understand? Would you rather bet that you don't know them before, you don't know whether they've taken training or stuff like that, but would you rather bet that a 6-year-old child would make first race compared to a 15-year-old child? Like the both of them are in good health, and you know that this person is 6 years old child and this person is 15-year-old child. Would you rather bet on the 15-year-old or on the 6-year-old that okay, which one is going to make first place? Richard,
I'd
I'm sure
rather
that
bet on the 15-year-old.
exactly. So that's just like this. You're in a buying trend, right? You're so sure that this buying trend now it has given you an order flow, which has broken a predominant like previous structure. Okay, let's say you're in a buy trend. That buy trend now gave you in that buy trend you saw an order flow that's broken a predominant seller structure. Do you understand? Probably you're even seeing inducement there. Would you rather invest your money or risk your money on the pullback coming to that your order flow go, which you're meant to buy from, or would you rather wait carefully and patiently when it comes to your order flow, you just take your buy? So that's just like what I'm trying to explain here. You're betting, you're risking. So risk smartly, risk wisely. Counter trends, or rather counter trend trades are risky, but they are very sweet. So with time, you just keep on. That's what backtesting is called now. Now, because somebody asked about backtesting, and I was like, let's count our A's before we go to our B's, or rather, let's count our one before we go to our two. So now you know majorly all the necessary criteria of trading. You know AOI, you know pullbacks, you know inducements, you know market structure shifts, you know order flow. So when you're now doing your back testing, you know what you're looking for. You want to see that, oh, order flows, how do order flows work? Let me look at, today now, I just want to back test order flow and see how price action fits into order flow. Tomorrow now, you'll be like, okay, I just want to back test area of interest and see how area of interest fits into price action. Next tomorrow, I just want to back test order reversal or pullback and see how it fits into price action and how I can capitalize on, holding a position from those pullbacks. So these are things you should now, put your own effort in. So yeah, I think I was able to answer that question. Princess, do you have something to say? Celine, do you have something to say?
Yeah, I
Yes, sir. So
wanted
I
to
just
so you can go
Okay,
ahead.
let
okay.
Princess start.
My question is quick. I just wanted to ask if point of interest is the same thing with point of that is POI is the same thing with point of interest.
Point of interest is POI, area of interest is AOI. All of them are the same thing.
Okay, all of them are the same thing.
Mm.
Okay, just the things that are confusing.
But you understood my explanation about area of interest and how it works, right?
Yes, yes, I do.
All right. Celine.
Okay, the first one I wanted to be clarified on is once you spot another block, it means there's going to be a break of structure. You've clarified me on that one. But then my second question is, these other blocks, can we spot it on resistance levels?
Yes. No. Maybe I think the first example that I shared today, it was mostly about a resistance zone which turned to a support zone and also had a fair value gap, and we used that zone as our other block. Right. Now I had to start the class with that because it was a little bit complex. But then somebody mentioned something about change of character, and I'm like, okay, if you feel that okay, you like that zone speaks to you. You want to see price move from that zone, but you're not so sure. You can now wait it out, wait for your change of character. Obviously, your change of character will be when your higher high transcends or rather trades above your previous lower high if it's in a uptrend, and when your lower high, transcends or trades below your previous higher high if it's in a downtrend. So yes, your resistance zone can be your order block based on the context. Dr. Bells. Okay.
Okay, Jen, so I wanted to ask, what I wanted to ask, okay, it's a bit different from what you thought today. I wanted to ask, like, how long did it take for you to be able to predict the market and understand the different market tactics?
I can't hear you. Speak louder.
Okay, I said, how long did it take for you to understand the market tactics, predict and what is going on in the market and look at chart and be able to say, okay, from this pullback, from this candlestick pattern, this is what is going to happen. Like, how long did it take? That's just what I want to know for you personally.
Okay, so I like when people ask this kind of question. It simply means that they are relating to what I'm teaching and it's actually making sense to them. So it takes time. Actually I'm self-taught. Aside from GIDA, I'm self-taught. Before GIDA, I was self-taught. That's why you see that I'm even here instructing you guys. because immediately after my cohort with Gita, I joined the team because I wanted to also share like my own experience with the other tutors and let's just like make something happen. Right. So this is something I love, and I've been in the industry for up to 4 years now. So if you're asking me if learning stops, then no, learning does not stop. I mean, no matter how beautiful that question may seem, that's how I see the question. Learning does not stop. You have to keep learning. You have to keep trying to get better and keep cracking the puzzle, right? So yeah, I've been here for 4 years and it's been ups and downs, but we're getting there, right? I can confidently teach, lecture, mentor, and make sense. Not everybody can mentor and make sense, so that counts. So without any further business, somebody should adjourn this meeting for later.
I push for the adjournment of this meeting.
Okay. Seconded by who?
Seconded by me, Hanifa.
You've not spoken since the class, so now you know how to second.
Something like also okay. Sorry, sir. I've actually been very sick. I was just trying to follow up.
See you guys Friday then. Bye.
Bye.
So happy birthday in advance soon.
Thank you so much.